Hey guys, welcome back to the channel. So today we're going to be discussing Facebook. We're going to be talking about what occurred last week with the stock dropping 8.32%. Actually, they dropped even an additional 1.65% after hours. Why that occurred and what that means for the overall direction of Facebook and the markets. So let's just hop into this. So if you guys are not aware already, Facebook fell significantly last Friday, 8.32%. Now this is important for a number of reasons. One, Facebook is a behemoth in terms of the FANG stocks, the Facebook, Apple, Amazon, Netflix, and Google. So, as the FANG stocks go, that the people in the tech industry and then in the investment industries call it, as FANG goes, the market goes. So the fact that one of the FANG stocks began to fall significantly, on also a really big down day, really points to maybe there's some cracks in the stock market. But let's talk about Facebook specifically, although all of the stocks were down for Friday, because it was down more so than the other stocks. And the reason being is that the news got released that advertisers who market on Facebook's platform to target audiences, well, their advertisements were actually being placed next to hate speech content and listings and postings without the advertiser's knowledge. Now, if you guys aren't very familiar with how the advertising world works, and I'm not really for the most part, but I do know that they're very sensitive with image. I know that that's everything because the advertisement is all based on getting people to purchase the products and the services and to also see the company in a good light. And so to find out that Facebook was knowingly or unknowingly placing very big important companies products next to hate speech content is a huge no-no. It's a big mess up and it just can't happen. And so when advertisers found that out, they were livid, absolutely livid, and rightfully so. And so they've decided to pull their marketing dollars for the month of July. Another big reason that they also did that as well is because there's a huge, well overdue movement that's now taking place in our country for this, basically promoting finally equality and self-respect across the board, irrespective of race and quality and creed and class and everything else, right? So as a result of that, our country is in a very, very sensitive, delicate time. With being sensitive with how we treat and speak to each other, and and our biases and just all sorts of things. And this coronavirus as a whole really has caused a lot of us, if not most of us, to really kind of look internally, myself included, to see how it is that to see what it is that we're doing to contribute to the problem, but also to see what it is that we can do internally as a whole and individually to help make the situation better so that we all feel like we're loved and respected and appreciated. So, in a weird kind of way, I do think that we as a country and as a world is going to come out better as a result of the virus. But like anything, before you can get financially fit, you have to go through a lot of pain, and I think we're going through that phase right now. So that's my social disclaimer for the video. So back to Facebook. So we take a look here, right? It's fallen Friday. It fell significantly, and the advertisers pulled their dollars, and it fell 8.32%. Well, I don't think this is going to be over, and I'm going to tell you why. The sensitive nature of the economy right now, the sensitive nature of the movements that are taking place, justifiably so, and the fact that Facebook has a reputation for constantly really bending the rules, the social rules and what is ethical. So they have been fined in the past. They were found to years ago to have use social experiments with their advertisements online, with changing people's behavior and the patterns with their positive comments or negative comments. And Facebook, for a lack of a better way of explaining this, have just basically manipulated people consciously on a continual basis. And they've done so at a very profitable phase because of their backing of the advertising money, right? So Facebook has over 2.32 billion, subscribers or accounts on their platform. They are the largest socio-economic platform. Well, let's just say, I guess, social media platform on the planet. And so with that comes a great responsibility for ensuring that that they're not promoting hate speech and that they're not allowing that type of language and behavior to grow and to fester and to develop on their platform. And they've stated they've done lots of things to stop these things from occurring, but they've been very slow with it. And so I think advertisers are finally fed up because they're embarrassed. It's hurting their brands as well, and they're pulling their money out. So if we take a look All right, I want to go over. I want to cover the SPY for a second. I'm going to start with the high level and go back down to the low level. So if we go over and take a look at the SPY that occurred, take a look at that. Let's go over to the daily. This is not the SPY. What is this? I don't know what that is. What's SP? I don't know. You guys tell me. I don't know. What is? There we go. All right, got the pretty graph up. So if you take a look here, you know the SPY, if you guys aren't familiar, is the S&P 500 ETF, which is an exchange traded fund. It just basically covers the overall total market direction of the top 500 companies on the S&P. All right, so Friday it fell back 2.38%. If we take a look at my beloved Apple, that I am just dying and waiting for it to fall back, and you know it just seems invincible right now. Apple fell back, 3.07%, right? So if you take a look here, take a look at Apple, all the way back from, we go back to March 20th, it hasn't even damn near broken the 9-day moving average, which for all you guys who are kind of new to this, the 9-day moving average is just kind of like a regular short-term trend line that shows the direction of a stock. It hasn't even broken that since 3 days, which means it's been super strong. And let's go take a look at, I don't know, let's go with another, let's go take a look at Google here, Alphabet. Take a look at what happened here, 5.65%. So for all intents and purposes, right now, the stock market as a whole, I think, is finally going to pull back. We have had a hell of a run since March 17th, from 1,013 up to 1461. If you guys were buying anywhere near down here, or even if you just said, okay, I'm going to buy towards the break of the 9-day, on the reversal, and just walked away, I mean, you'd be up 35% right now, just a ridiculous amount. So this pullback here is well overdue. And again, there's no coincidence that all of the stocks, for the most part, pulled back on that Friday, right? I mean, it was just, the FANG stocks and the economy as a whole. When I mean economy, I really meant to say that the market, they all usually pull back collectively. And take a look at Amazon, it pulls back 2.24%, yada. So back to Facebook, okay, 8.32%. If we take a look at the support level here, the initial support level is at 216.08. It has closed below that. There's a kind of a lighter support level around the 216 level. Well, it kind of closed below. Well, it's actually stopped at that, but then it dropped below that after hours down to 212. Now, could this bounce up after hours Sunday at 5 o'clock in the, those are the futures. Could this bounce up, Monday at 4 o'clock Eastern Standard Time, 3 o'clock Central Standard Time, when the pre-market opens up? Absolutely. Do I think that that's going to happen? Absolutely. Personally, I do think that an 8.32% drop on a company that is worth hundreds of billions of dollars is just far too much. This is definitely a panic sell. Facebook released a lot of data. They released a lot of news and inside emails that they sent out to their biggest advertisers and partners, quote unquote, stating that they're doing these, they're taking strong initiatives to remove the hate speech content, yada. And I'm like, you know what? They should have been doing this the whole time. Again, Facebook has just notoriously been known. They've been known to just not be aggressive enough with controlling, or I should say with filtering out a language and behavior on the platform that's not going to be tolerated. Once again, here we are as of in the month of June 2020, and same thing, right? Every year seems to be something new with these guys. But with that comes buying opportunities, and that's what I care about. Obviously, I care about that's what we care about here. And obviously, we care about making sure that the content and the language on the platform is important. But as a result of Facebook's mistakes, the second thing is going to be taking advantage of this and making some money off of it. So if we take a look here, 214.51, do I think that it's going to have a little bounce back? Well, absolutely. It's 920. It's even shot down the 50-day. It shot from the 20-day to the 50-day literally in 1 day. That is insane, right? And saying, the sweet spot for me to enter into a stock right now, into Facebook, is going to be the 200-day moving average, right? So I'm looking somewhere around this 200, 210, 215, 199 range to maybe put in a little position size. And the reason I want to wait until then and not now is because the entire stock market as a whole, it's just now beginning to take a pullback. Now, what I also found was very interesting about Friday is that usually the tech stocks are the last ones to break. I don't know why we keep going back to the SP here. What is SP? I don't even know what this is. So let's get out of that. If my Weeble can cooperate today. All right, cool. So what I find interesting about Friday was that the tech stocks were really the main ones to lead the pullback. And usually they're the last ones to crack, which to me is a clear indication that the stock market is about to do a correction. So typically what happens when you have a really, really big red day like this is that the next day is going to be a green day. Usually, if you take a look here, this huge drop here, this is a green day. It finished red on the day, but it was green overall. Had a big drop here. What are we doing? So it was a relatively good, healthy drop. It actually was red the next day, but it did have a nice reversal. Big red drop here was green. Big red drop here is green. Big drop here is green. The majority of the time, you're going to get a green day within a day or two. So I do anticipate Monday being a green day, but I also anticipate, if you take a look at the weekly on the stock chart on the SPY, we are still, in my opinion, well overbought. Okay, so we had this significant drop down from 217 all the way up to, from 339 down to 217. Now we've gone all the way up to almost damn near all-time highs, at least right off of 5% of that, and now we're having this pullback. Do I think that we're going to pull back more? Yeah, I do. I really do. Some of the targets that I'm looking for a pullback is going to be back to this 200-day moving average, back to the 269.43. I do think that we're going to touch that. We have a lot of the COVID-19 infections that are going up even more than when we shut down the economy as a whole, which is really weird, by the way, because you would think that things were slower and that we were actually able to stave off a lot of the spread of the virus, which we have been. But as a result of opening up the economy in some of the states too soon, my state included, the state of Texas, we actually have exacerbated the problem, and it's continued to actually get even worse than when we shut the country down. So just a weird time. So as a result of that, I definitely think the stock market's going to have some pullback. I just can't possibly see how it isn't. Right? We're way over bought here. Now, not on the weekly, we're not overbought, but if you just take a look here overall, I just take a look here. We were overbought here at 71. We pulled back some, but if you follow any of the other tech stocks, we're still way where we should be at, okay, in terms of proper valuations. So if you guys are looking at getting into Facebook, I don't think this is necessarily a very bad entry point. I mean, again, it's definitely a pullback, so that's the smart thing to do, right? I would not be going in heavy here for a long-term investment. I would not be putting in half my position size or portfolio, whatever it is that you guys have, whether it's a couple $100 or a couple of million or whatever it is. I wouldn't do that. If you want to take a little small starter position size, that's great. 5% of your portfolio, whatever you have, perfect. But I really do think that we're going to get down to this 197 range, if not even break it. Again, we're just way overbought. Also, we still have lots of unemployment that has yet to be resolved. People are still being laid off like crazy. We still have over 40 million people that are unemployed. It's still the worst it has been since the Great Depression. And as I've told you guys, if you go back to the last recession that we had in 2008. If you go back and take a look at that, our recovery was nowhere near as fast as what we had occurred the past 3 months, right? I mean, our recession took place from basically August 31st, 2007, and we didn't hit bottom until February 2009. I mean, there's no way in hell that this is the end of the recession. It just isn't. So I think this huge this huge pop-up that we've had here is a result of the very, very aggressive monetary policies that the Federal Reserve has done. I mean, let's think about it. Everybody's gotten a check for the most part, right? You've gotten a stimulus check. They're literally supporting 40 million Americans, which is over 10% of our entire population. And you gotta also think we gotta count women and children and people under under 18 who are not yet considered adults, right? If you include them as part of the population, they're really supporting way more than 10% of the workforce. It's probably closer to 20% of the workforce. They're just flat out paying. And so because of that, this is not the end. I do think that eventually the monetary policy is going to weaken and run out, and we're going to probably come back down here and test these 242 levels. Might even get even lower than that. So I read an article yesterday that said that Warren Buffett is still 40% cash. Now, to a billionaire, that's not a lot, but overall, it's huge. It's a huge amount of money. And so to think that he's 40% cash in his portfolio tells you that he's expecting a significant drop. And that's why I said this drop here on the daily is actually probably a precursor of what's about to come. So I think that the market makers and the investment companies are using this as an excuse to finally cut bait and get out of the stock. But I do think overall we're going to start to see a significant pullback. Definitely probably at least down to the 200, maybe even a lot more than that. But that's where I think we're going to go with this. So I hope this is beneficial to you guys. Hopefully I didn't kind of ramble on too much. I wanted to be able to cover not only the stock itself, but the overall direction of the markets and where I think we're going to go. I think overall we are looking at least another 10-15% pullback in the short term. And that's where I think we're going to be headed. So just be smart about your investments. Don't YOLO this game. We are in very uncertain times right now, far more than I think most of us have seen in our lifetime, or I should say, outside of 2008. And so, this is just a good time to be smart about it. You want to make sure that you're buying very strong, technically sound stocks, the Apples, the Facebooks. You want to make sure you're buying the Googles. I'll never get over that word. It just sounds, you got the Googles. Make sure you're buying the Visas. Go ahead and support an American car company, Tesla. By the way, this is the only car company I will ever purchase in my life. I don't believe in any other car company in America outside of Tesla. Get you some Microsofts, right? You got lots of strong companies that, as you can see on my watch list, are going to make a lot of money in the future. Zscaler was something that actually I had bought and sold out, and hindsight should have kept it a hell of a lot longer. But this is going to pull back. So lots of good strong stocks with good strong fundamentals. And when these stocks pull back, just buy 5-10% of what you have in your portfolio and walk away. And next year you'll be up 45-50%. That's how the stock investing game works. So if you guys have found this video informative and beneficial, first off, I want to thank you so much for getting to the end of it. Secondly, I highly recommend that you guys subscribe to the channel. This is a financial education channel. I cover a lot of things dealing with stocks, dealing with investing, dealing with investments, dealing with a lot of did you knows with investing, with credit cards, with how to spend the money, and just with the overall psychology of money itself. So anything that's going to help you guys improve your overall daily quality lives is what this channel is about. We are obviously very new, very small channel, but we are going to see significant growth hopefully here with you guys' support. So thank you so much for watching the channel. Make sure that you hit the like, subscribe, and comment, and I'll talk to you later. Take care.